Namaskaram, Namo Namah. Welcome to Business Finance Lecture. Today we are going to discuss about the three types of financial decision. First point, investment decision. There are two types of investment decision: capital budgeting decision, which is for long-term investment decision, and second is working capital management, which is for short-term investment decision. Second point, financing decision. In case of financing decision, quantitative and qualitative aspect of financial planning is discussed. Capitalization refers to quantitative aspect of financial planning. How much fund is required? How much total funds are required? But in case of capital structure, it is qualitative aspect of financial planning. Which type of capital, which type of funds to be required? Ownership capital or borrowed capital? So in case of financing decision, quantitative and qualitative aspect of financial planning is discussed, but we more focus on the capital structure. Third point is dividend decision. So in case of dividend decision, the firm decides to pay dividend or do not pay dividend. If paying dividend affects the market price of share MPS, then we can say that dividend is relevant. Otherwise, we can say that dividend is not relevant. Now let us discuss in detail one by one. First is investment decision. Under first point, first subpoint is capital budgeting decisions. It is long-term decision which is related to fixed assets. Its objective is to identify those assets which are worth more than they cost. Let us take the example of Delhi Metro project. If NPV, net present value, is positive, then project should be considered for investment. Suppose that if we talk about DMRC, who is constructing Delhi Metro, whatever cost involved for building metro project, for construction of the metro project, and what are the revenue expected from the project, if revenue exceeds the cost, then we can say that the project is profitable. But we have to keep in mind the present value of the cash flow, that is cash inflow and cash outflow. If difference between present value of cash inflow and the present value of cash outflow is positive, if difference is positive, then project is regarded as acceptable. If cash flow is lesser, it means NPV will be negative. In that case, project should be rejected. Now come to the next point. Second point under investment decision is working capital management. It is short-term decision which is related to management of current assets. There are two types of working capital: gross working capital and net working capital. Gross working capital refers to current assets, but net working capital is the difference between current asset and current liabilities. A finance manager has to ensure sufficient and adequate working capital to the firm. For example, cash management, inventory management, receivable management, etc. Now, come to the next point. Second point, financing decision. It deals with financing pattern of the firm. There are two main sources of finance, as we have already discussed: ownership funds, equity share, borrowed fund, debenture or debt. It is also related to qualitative aspect of financial planning. For example, capital structure models, EBIT EPS analysis. EBIT, earning before interest and tax; EPS, earning per share. So EBIT EPS analysis come under financing decision. However, capitalization deals with quantitative aspect of financial planning. Come to the third point. dividend decision. It deals with appropriation. Appropriation means proper utilization of PAT, profit after tax. So dividend decision related to the proper utilization of profit after tax. In this case, the prime decision is PAT to be distributed or retained. It means the firm takes the decision either to distribute profit after tax or do not distribute profit after tax. PAT is retained for reinvestment opportunities of the firm, and PAT is distributed to satisfy the shareholder of the firm. So the basic objective behind the two decisions is different. In case of retention of profit, that is reinvestment opportunity, but in case of distribution of dividend, the firm wants to satisfy the shareholder of the firm. It also highlights the relevance of dividend with respect to effect on value of the firm. As we discussed, if paying dividend affect the market price per share, we can say that dividend is relevant and the firm should pay dividend in that case. For example, the Walter model, Gordon model, model of dividend. Model means Modi-Glani-Miller model. Thank you all of you. In next video lecture, we will discuss the objective of FM. Thank you so much.